Welcome to Tracking IPTA. Price action this week was a little wild as expected due to it being NFP. If you're new to trading, this is the 1 week you want to be cautious of. I learned that I cannot trade counter trend trades the same way I trade my pro trend trades. I've come to realize that I need stricter guidelines for managing my counter trend trade. Counter trend trading is more challenging than trading with the trend and requires patience, discipline, and careful risk management. As you can see, I got all caught up in shorts this week, even though my weekly program was bullish, hence why I had more losing trades than winning trades. But to be fair, those were the setups that presented themselves clearly to me in the charts. Finished the week just a little over break even with about 1% increase in equity, $245, and overall we're up on the account 25.7%, which is $6,435. Any day or week at or above equity high is a win in my books. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means that you won't be able to see my executions. However, you will be able to see my horizontal line, which represent the time aspect of trading. The most important tool you need to track down IPTA's movement. Time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. With this model, you can take counter trend trades. For example, you can take sell setups even if your high time frame direction is bullish and vice versa. It's just that your probability of winning reduces significantly, and that's exactly what happened to me this week, as you can see from the losing trades from this week. If you're new to trading, I highly suggest only taking trades in the direction of your weekly program so you can avoid weeks like this where the market is highly manipulated and counter trend trading is low probability. We're going into this hunt with the understanding that you guys have already arrived at your higher time frame directional buy. This is just a hunt for purely setups. To the hunt, let's go. Monday, June 3rd, trade of the day breakdown. We had the AM session sell formation, which is a counter trend trade. We had high and medium impact news come out in the morning, 9:45 and 10 a.m. Post 10:10 is when we're looking for a signal to enter the market. And as you can see during the opening range, we had price trade above a key high, displacement lower causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We're waiting for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that caused the market structure shift near the equilibrium of the range. As you can see, we had a fair value gap CB at or near the 50% of the range right here. So above the 50%, we have the consequent encouragement of this CB. So you would have been tagged in this trade at 10:15, breaking even at 10:53, taking out that trade at 12:12 for a total time of 1 hour 57 minutes in this trade. Drawdown in this trade was 31 ticks. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is AM section post 10:10. Check. The range, we're in the upper to middle quadrant of the range. We're in the premium for a sell. Check. Also, we have liquidity created right here in front of the consequent encouragement of the CB post 1010. Check. 3 out of 3, making this a high probability trade that netted you 6% for the day. Hypothetically speaking, you would have been done trading for the week after this trade, okay? Tuesday, June 4th, trade of the day breakdown. We had the AM session sell formation, another counter trend trade. This one failed, okay? Let's break it down. So we all start with the news. As you can see, we had high impact news coming out at 10 a.m. Post 10:10 is when we're looking to enter the trade. So as you can see, opening range, we had price trade above a key high. We took liquidity above a key high. Displacement lower causing the market structure shift. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the EQ of the range. Have this fair value gap CB near the 50% of the range. You would have been tagged in this trade at 10:30. You don't get to break even. You're taking out this trade at 2:15 for a total time of 3 hours 45 minutes in this trade. Drawdown in this trade was 158 ticks for a 2% drawdown. Okay, so you would have took a loss in this trade. So I did get in this trade, and this is the trade that got me to realize that I need stricter management rules for counter trend trade. First of all, I really didn't like the displacement lower that broke the structure. I didn't want to see this CB used before the structure was taken. So I was wary of that, but I was like, okay, I'll give the trade a chance. And I gave it a chance, a counter trend trade. I actually moved to break even inside the new week opening gap. I moved to break even when price was consolidating in here. My gut was telling me that something's not right with this trade. First of all, you already had issues with the displacement. Just to be on the safe side, as a counter trend trade, is NFP week. Move to break even, and then so you don't have to worry too much about the trade. So I moved to break even in this area, and as you can see, it comes back and takes you out. But you would have been down 2% on this day. Even though we took a loss, let's consider the factors that made this a high probability trade. First, we have the time aspect. Is 10 a.m. AM session, post 10:10 is when we're looking to get in. Check in the range. We're in the middle to upper quadrant of the range. We're in the premium for a sell. And also, we do have liquidity here and liquidity here created in front of the fair value gap CB as well. So 3 out of 3, making this a high probability trade. And even though you took a loss, that is part of the game. Wednesday, June 5th, trade of the day breakdown. We had a launch session, sell formation, a counter trend trade that failed again, highlighting the importance of sticking to the weekly program and understanding that your high probability trade will be in the direction of your weekly program. Okay, let's break down this trade. As you can see, we all start with the news. Wednesday, we had high and medium impact news come out in the morning. 8:15, 9:45, and 10. Close to the ending of the AM session, we had price trade above a key high, liquidity taken above a key high, displacement lower, causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. After this candle closure would confirm the swing low, then you'll be looking to anticipate execution. For execution, we're looking to enter on a fair value gap created in a displacement leg that took structure at or near the equilibrium of the range. We had a fair value gap right here at the equilibrium of the range. You would have been tagged in this trade at 11:30. Don't get to break even, taking out this trade at 11:42 for a total time of 12 minutes in this trade. Drawdown in this trade was 52 ticks for a 2% loss. Okay, let's consider factors that made this trade a high probability setup. First, we have the time. Yes and no. Technically, we have the time is the launch session. 11:30 starts is the beginning of the launch session. It's London close starting the launch session. So we have the time, the range. We're in the middle to upper quadrant of the range. We're in premium for a sell. No liquidity created in this setup, but we do have 2 out of the 3 matching up to make this a high probability trade. Even though you took a loss, that's part of the game. You're selling in a predominantly bullish market. That is bound to happen. Thursday, June 6th, trade of the day breakdown. We had a AM session sell and a PM session sell setup formation form. Let's break it down. We had high impact news coming out at 8:30. 9:30 to 10 o'clock opening range. We had price take liquidity above a key high, displacement lower causing a market structure shift. The displacement leg has a fair value gap CB near the swing high that caused the market structure shift. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on the fair value gap created in the displacement leg near the equilibrium of the range, and we're looking to enter the market post 10. So as you can see, we had a fair value gap CB above the equilibrium of the range. You would have been tagged in this trade in the morning for 10:30. You don't get to break even, taking out that trade at 2:10 for a total time of 3 hours 36 minutes in this trade. Drawdown in this trade was 55 ticks for a 6% bagged and tagged. This was a counter trend trade. Okay, this trade also offered you another opportunity to get in during the PM session. As you can see, price trades above the launch session highs, displacement below causing a market structure shift. Displacement leg has a fair value gap CB near the swing high. It's still coming back into the CB from the morning setup. So it offered you another opportunity to get in. You would have been tagged in this trade at 1:54. Don't get break even, taking out that trade at 2:04. Total time in the PM session trade was 10 minutes. Drawdown in this trade was 7 ticks for 6% bagged and tagged. Another counter trend trade. Okay, so you had 2 opportunities on Thursday to get you 6%. Let's consider factors that made these 2 trades a high probability setup. First, we have the time aspect. This is the AM session setup, also PM session setup. Time aspect on both trades. The range, we're in the upper to middle quadrant of the range in the premium for a sell. Same with the PM session, upper to middle quadrant in the premium for a sell. Liquidity, both CBs had liquidity created in front of it. For the AM session, we had this liquidity right here. And for the PM session, we also had this liquidity right here that it came to take. And once it took that liquidity, you saw immediate reaction. Okay. And those were the 2 trades, potentially 1 trade, but two opportunities to get into that sell formation. Friday, NFP Friday, June 7, trade of the day breakdown. We had a AM session, buy formation, pro trend trade, the first one for the week. Surprisingly, on such a bullish week, this was like the first buy formation that I had seen that was valid to actually enter. Let's break it down. So we had the NFP unemployment data come out at 8:30, 9:30 to 10 o'clock opening range. We have price trade below key low, displacement higher causing a market structure shift. The displacement leg has a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. We had a swing high form right here. For execution, we're looking to enter on a fair value gap created in the displacement leg that caused the market structure shift at or near the equilibrium of the range post 1010. For entries in the fair value gap, we have three options where you can enter. So you can enter at the high of the fair value gap. You can enter at the consequent encouragement of the fair value gap or the low of the fair value gap. I usually use the one closest to, if I'm buying, I use the first one below 0.5. So you would have been tagged in this trade at this high of the BISI right here. So yeah, you would have been tagged in at 10:11. Don't get break even, taking out that trade at 10:46 for a total time of 35 minutes in this trade. Drawdown in this trade was one tick for a 6% bagged and tagged. You see what happens when you take pro trend trade. The drawdown is minimal. If you didn't catch this trade, it also offered you another opportunity to get into the trade. Came back into the bit. It could have been tagged in this trade at 11:11. Don't get to break even, taking out this trade at 12:12 for a total time of 1 hour 1 minute in this trade. Drawdown this trade was 17 tick for a 6% bagged and tagged. So if you missed this entry, the market offered you another opportunity to get in here. Let's look at factors that made this trades a high probability trade. First, we have the time aspect, the AM session check. We have the range. We're in the middle to lower quadrant of the range. We're in a discount for a buy. Liquidity, we don't quite take liquidity on this entry right here, but we do have this entry does take this liquidity and then straight expansion higher. So 3 out of 3 on the second if you entered on the second trade, but 2 out of 3 if you entered in the first trade. Either way, both were a high probability set, netting you 6% for the day. This NFP Friday offered us another setup during the PM session. We had a sell formation form during the PM session. This Friday, we had a seek and destroy market profile, which means that liquidity was taken on both ends. Let's break down the PM session trade. Before PM session, we had price trade above a key high. Really had the unemployment claims come out in the morning. We don't really care about the news. If we're just using it as a TV guide of when to anticipate sell. So we had liquidity taken above a key high, displacement lower causing the market structure shift. The displacement leg has fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg that caused the market structure shift at or near the 50% of the range. As you can see, we had the fair value gap right here. So when the 1:30 p.m. session started, we had price trade to the, so this time you would be entering at the consequent encouragement of the CB, because that's the first premium array above the 50%. Okay, so you would have been tagged in this trade at 1:30, breaking even at 2 p.m., taking out the same time at 2 p.m. Total time in this trade was 24 minutes. Drawdown on this trade was 2 tick for a 6% bagged and tag. Let's look at factors that made this trade a high probability setup. First, we have the time aspect is the PM session check. Range, we're in the middle to upper quadrant of the range. We're in the premium for a sell. Liquidity, we have liquidity here created in front of the CB. When price takes that liquidity, you saw immediate reaction. 3 out of 3, making this a high probability trade, netting you another 6% on this NFP Friday. And that was NFP week done and dusted. Ended the week just a little bit above break even. I survived NFP. You'd be surprised the number of new traders that don't survive this week. I'm sure a number of you blew accounts or lost a lot of trades today. Trust me, it's not on you. This week is highly manipulated. Okay, so don't be down. Keep going. And I hope you guys enjoyed tracking IBTA this week. See you all next week.